Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at the confused picture with Bitcoin, trying to decide which way the Bitcoin price is going. Are we still in a bull market or have we started a bear market? We'll have a look at the comparisons of some of the bullish factors as well as some of the bearish factors. There is one strong clue that the Bitcoin miners are giving, which may well determine which direction Bitcoin is going. And we'll also have a rundown on the various timeframes for Bitcoin to see exactly what they're saying, and also compare what's happening with Bitcoin with the wider markets and why there seems to be a disparity between the wider markets and what's happening with Bitcoin. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to start off with the monthly time frame and have a look at exactly what the bigger picture looks like for Bitcoin currently. And what we have is that we do have our 8 exponential moving average, which is the blue line here. And as we've been following this line for the last 3 years, that it's only when, and this is one of the strongest indicators, that once we close below the 8 EMA, the blue line, on a monthly time frame, that will signal the end of the current bull market. And what we've seen so far, since we bottomed out here at 15,400, we've only really fallen below that. And this was at the beginning of the bull market. So this was obviously not the time frame for the end of the bull market. But currently, we are now in the time band of the end of the bull market. So if we now have a close below the 8 EMA, then that would be a very strong signal that we've come to the end of the bull market and that we're facing a 12-month bear market. So at the moment, it's all good news because the 8 EMA currently is at 105,500. So as long as we don't close there in the next 4 days, so we're talking about the close on Friday, as long as we maintain above this, so we're good to go for at least another month. The only disappointment here is that if you look on the RSI, it's still showing a bearish divergence. So we are still on a lower high on the RSI while we made a higher high on the price. So unless we can have a big move to the upside, this will remain where it is. So this is maybe something that we just have to be a bit cautious about. Maybe we're not going to get this big move to the upside. And also, if we have a close look at this point, at these candles, we have got some sort of a consolidation pattern for about 4 months here. And the current monthly candle was actually down here at around about 107, 108. And at that point, it looked like it was going to be a bearish candle. And then this would have been pushing it to the downside. However, in the last few days, it has actually recovered and now becoming a long-legged doji candle. So this is where, once this closes, and if it closes where it is currently, and we've got 4 days to go, so anything can happen, of course, but this candle will mark the top here and the bottom, and we may end up consolidating within this range for a few months, which then lends itself to an extended 4-year cycle. It may well be that if we consolidate here and then break out, we could end up around about March, April, May of a new blow off top, because at the moment, as we've seen quite clearly, there's no blow off top, there's no characteristics that you would normally expect for the end of a bull market. But there are so many other factors that are saying that this has come to an end. We're just trying to decipher the various factors and to try and come to some sort of a conclusion of exactly where we are in this current 4-year cycle. So the monthly candle is actually developing into quite a healthy looking candle, which doesn't say that this is going to go to the downside. And if we go on to the weekly time frame, we're getting quite a nice little picture that's developing, because in the last few days and at yesterday's close of the weekly candle, which is this one here, you can see that the 8 EMA, the blue line, we recaptured that, having fallen through it, very bearish the previous week, but this week, this is quite a bullish move from Bitcoin that we've recaptured the blue line, the 8 EMA here. So this particular candle falling on the weekly time frame below the 8 EMA is usually the prerequisite for the candle falling below the 8 EMA on the monthly time frame. So there was this danger from last week that this was going to have a continuation, but we didn't get that continuation. Instead, what we've got is a tweezer bottom here. This was a bullish bounce back above the 8 EMA. And if you'd have asked me last week, would we close above the 8 EMA, I would probably have said that on a balance of probabilities, this is not what's going to happen. So this has now unexpectedly recaptured the 8 EMA. And the question is, can we have a follow through? So we are currently resting on that 8 EMA with a possibility to move to the upside. However, when we look at the daily time frame, we do have some sort of a pullback that's due now because of this move to the upside. So we need to keep an eye on that. But what I wanted to show you was also the fact that this white line, the 50 simple moving average, we have bounced off this on numerous occasions. This has become a very strong support. And currently what we've done is we've bounced back off that. And if we do continue sideways, then this will allow this white line to catch up and then have a big bounce from here if we're going to have a blow off top. So just keep an eye on this white line, that if we do trend sideways, which we have done, within the range of around about 108 and 114,000, if we continue with this range bound price action, then it'll be the 50 that it'll bounce off. And if we lose that, that will be a very strong clue that it wants to go down rather than up. Okay, I'm going to move on to the daily time frame. And before I have a look at the daily time frame through the eyes of the 60-day cycles, just want to bring something very important to your attention. And that is, when you zoom out on the daily time frame, what we do get here is that we've got a very strong support line going all the way back to this point here, which is around about April this year. So you can see quite clearly we've had support on this line now on numerous occasions, and at this point a couple of weeks ago we actually fell below it, and usually the classical analysis would be for us to come back and retest that support as resistance and then break down to the downside. So this is where the majority of the thinking was, that having broken below this support line and retested it as resistance, the move down to lower levels would have continued as a continuation pattern. However, Bitcoin doing what it normally does, in the last few days, especially yesterday, it actually broke out from that resistance. And this is obviously a bullish move to recapture that resistance as now back to support again. So we're moving to the higher levels. And the question is, how far can it go? One thing just to be mindful of is that the overall bigger pattern that's developing here is that we did have a head and shoulders pattern. This is why the strong balance of probability was to the downside. But we can only report what is happening with the current price. Maybe that pattern is still giving us a clue that we may get rejected at these levels here. And I've marked up 3 levels which we've been talking about in the private member section of this channel. So these are the various targets that we've got, that we've been looking at, and I just want to bring those levels to the attention here. So I'm going to have a close look at this point to see exactly where we are, where we're heading, and where are the possibilities that we may get rejected. So these various levels that I've got marked, there's actually 4 levels here, but the 3 main ones are the first 3, and you get them by looking at the Fibonacci retracement from the top at 126,000 and taking it to the recent low that we had down to 103,000. And these are the levels we marked up where there was a possibility of getting rejected and having some sort of a pullback. So the first level that we had was 111,000. And as you can see quite clearly, that when we came up from that level, that was exactly where the price got rejected and made all the way back down to around about the 107,000. So we retested the lower levels, bouncing from that level of 111. And then the second time it came up, it hit the second target, which was 114,000, which was at this point here. And once again, just like at the 38.2 level, Bitcoin got rejected at 114,000, and then that came back down, all the way down even lower to 106,000. And what we've done now is that this time around, we've actually come back, gone through the 38.2, gone through the 114,000 at the 50% Fibonacci level, and we're aiming for the third target here, which we call the golden pocket between the 61.8 and the 65%, and that is a price of 117,000 to 117,800. So this is where we have a key level where Bitcoin really has a decision to make, and this is where a lot of observers of the Bitcoin price will be able to flip. Above this price is where people would be going bullish again, whereas up to this point, there is still that feeling that we're having a dead cat bounce into these levels before we make at least a double bottom pattern here. So Bitcoin would have another decision to make at this point. And what we've really got with this level on this candle that came down to as low as 103,500 is that should we break below that, then a lot of people will flip back that we have now started the bear market here. We did have a reference point at the beginning of the current 60-day cycle. So because of the way this is behaving, it's caused a lot of uncertainty and confusion because we did break below that reference point. But instead of continuing with that, we've bounced back up towards these higher levels. So currently the price is about 115,000. But there are so many variables that can happen here. But the main takeaway here would be that we're going to be creating this W pattern. And it just depends on where we're going to actually get some sort of a pullback, either from the 61.8 at 117,000. And if we don't get that, then this could be a V-shaped rally to much higher levels. And really everybody's waiting for this flip above the 117. So a daily close above 117, call it 118,000. If we get a close at 118,000 on a daily candle, then the probabilities will switch more to the upside. And we do have this 78.6, so this is another place where we could quite easily get rejected, and that's at 121,000. And this is what really is causing a lot of the confusion, because when you look at Bitcoin and compare it with the wider markets, it's not really made a very strong move to the upside here. It's just really crawling up. So the question is really that when it comes back up to these levels, let's call it 117, it has hit 116, so it can actually come back from 116, because if you look left, you can see with this red zone that I've drawn here, you can see that it's come right into resistance in that red zone here. So this has been a very strong resistance, because in the past it's been a resistance and support all along here. And if you go back to these levels, incredible amount of support. So you knew that this is going to be a support and a resistance somewhere down the line, and this is exactly what's happened here. So we've gone right into that resistance one more time. So it's really 50-50 from here, I would say, but it's going to get rejected and have a 61.8 fall back to these levels. And this is why most observers would suggest that if it can go above the 61.8 level here, then the trajectory for Bitcoin should switch back to the upside, and then we should be then taking out the 126,000. But as I'll go through with these cycles, that level still seems highly unlikely. But before I go into these cycles, I want to just give you the pullback levels where it can possibly pull back, and those levels may well be where people may want to start jumping back on board for their leg to the upside. So if you do the Fibonacci level from the previous low to the current price, where it seems to be finding a little bit of resistance at this red zone here, then we're talking about the levels it would come back down to, and the highest probability level is obviously the 61.8, so we're talking about 107 to 108,000. So this is where I would expect some sort of a pullback, and this is where people will have a decision to make. For those people who've sold out and got a very bad feeling watching this go back up, then the chances are you're going to get a very good opportunity at this level here at lower prices for Bitcoin. This is not where I would be jumping in. I would be waiting for either a flip to the 117 to give you a higher probability play to the upside, or I would be waiting for the pullback down to the 61.8 or even the 109,000 at the 50% Fibonacci level. So these two are the highest probability plays that if we get a pullback, which is highly likely, I would think, and then Bitcoin will have a decision to make at this point here. So this is what I'm looking at in terms of the detailed analysis of what the price is most likely to do from a probability point of view. Okay, we're going to move on to the 60-day cycle. And as some of the members mentioned, that there are people in the YouTube community who are having a different count to myself, and that's absolutely fine. We should always remain open, fluid and flexible, and never let your egos or your stubbornness dictate your decisions in terms of looking at the price action. So the current count I've got here is that in the previous cycle, we started back in August on here, and what we got was a failed cycle where the start of the cycle was breached at this point where we had numerous closes below. And as I said at the time, one of the main characteristics of cycles is that if you get a failed cycle, then the previous high, which at this point was at 124,000, this play down here was telling you that this is not going to be breached. And this is exactly what happened. We had a dead cat bounce back up to this level here, 118,000, and then got rejected. And then we came into the end of that cycle where we expected a powerful move for the final blow off top here. Now we did get a powerful move all the way up to the 126,000, but this is where something is not quite right with Bitcoin. And this is what has to create some sort of caution that in the final stretch of a bull market, we should really have made much higher levels here. And just by going above the previous high and then getting rejected in such a strong way, this is telling you that there's something much deeper worrying for the Bitcoin price. So the current count that I've got, which is playing very similarly in terms of the fractals to the previous cycle here. So if I'll have a look at exactly what happened, we started the new cycle here. This was on the 25th of September. We got the powerful move that we wanted. We went above the previous high. So we obviously made a new all-time high, and this would have been a catalyst for much higher prices. But what we've got is, on our hands, is another failed cycle exactly like we got here. And the pattern is exactly the same, because after starting the new cycle, we went up to a certain level, just like here. Then we got rejected, just like over here. And then we've made the failed cycle, which we just made here as well. And then currently, and this has got to be something that's got to worry people who are very bullish. And while you may well be right that we may be going to much higher levels, however, if you just look at the fractals from the previous cycle, this seems to be just a counter trend rally, which we seem to be in just currently at the moment. And it's coming to exactly the same price levels over here. And previously, if this is to repeat, and this was the W pattern, which I was just talking about in the last chart, that this is going to probably come back to around about the 107, 8 or 9. So the 50% is at 109, and then the 61.8 is at the 107, 108. So this is the region where I'm expecting some sort of a pullback from where it is currently before it has a decision to make that it wants to go to the higher side or to the lower side. And at this point, we'll know and confirm whether this count is right or not. So let's remain open, fluid and flexible and let the price dictate our decisions and our analysis going forward. So maybe the previous cycle here is giving us a clue of what's about to happen here, because this is where we got rejected and then it had a decision to make at this point, but it went higher. And now it has another decision to make once it gets down to these levels. And one of the reasons why this is giving me a little bit of caution, while everybody else seems to be very bullish at the moment because they've seen the price go up from this low here at 103 all the way up to so far 116. So Bitcoin is doing its job to get everybody emotionally excited with this big move here, with this move here. But as you see, it's been just grinding up. It hasn't actually been an explosive move. And what really concerns me is that if you look at the wider markets, you can see it better on the daily time frame. If we have a look at the S&P 500, last Friday, we've broken above this particular resistance point and we're making new all-time highs. And if you look at the NASDAQ, again, this is broken out from a resistance point and making new all-time highs. And if you move on to the Dow Jones, last week, again, making new all-time highs from this resistance point. And then you come back to Bitcoin. This is the previous all-time high, and we're nowhere near there. So there's something not quite right. There's either a lot of selling pressure from the whales in the background of all this, or that the retail customers just haven't entered this market to push this. Because at this point, compared to the other markets, we should be around about here, at least in the 120s, if not above the 126. So everybody can make up their own mind. I'm not really here to make up the mind for everybody, because as you can see quite clearly, it's a very confused picture. And at the moment, it has to really prove itself. Bitcoin hasn't proven itself with this particular move. It's nowhere near the strength of the wider markets. The only thing that would flip a lot of the observers would be that if we flipped above the 117, that would give a lot of confidence for prices to move to the upside and for investors to re-enter the market. However, whilst there is that bearish pressure to the downside that we're expecting, we can have a look at a few bullish points that are actually on the horizon that we should take into account. The first one I'm going to look at is the probability of the rates falling this week. We have the Federal Reserve meeting this Wednesday to decide on the interest rates. And what we've got for the 29th of October, which is this Wednesday, and the probability is that the current rate that we've got is the 4.0 to 4.25. And there is a 96% probability that that's going to fall by 25 basis points on Wednesday. And as we've seen with the Bitcoin price, it really hasn't been able to price that in, just like the wider markets have priced it in. But also for the next meeting of the Fed, which is going to be the 10th of December, there's a further 95% probability that this is going to fall further by another 25 basis points to 3.5 to 3.75. And if we go to the next meeting in January, as far as that, there is still nearly a 50% probability that it's going to fall even further, another 25 basis points to 3.25 to 3.5. We've basically got in October, December and January 3 possible rate falls. So this would align with a bullish picture that if these are going to be priced in, then that should really push Bitcoin way above the 126,000 all-time high that we've got. So one of the signals that I think we should just be a little bit aware of, and I know that this is a bit of a niche area, being interested in the Bitcoin miners, however, they are giving us some sort of a clue of what Bitcoin possibly could be doing, because in the past it has actually front run the Bitcoin price. So I thought it would actually add a lot of value just to be aware of this particular picture. So I'm going on to Marathon Digital Holdings, where you'll see with quite a few of the other Bitcoin miners, they're showing a very similar picture. And as you can see quite clearly that in the last 3 weeks here, you've got bearish looking candles. You've got a shooting star, which hasn't played out. Then you've got a gravestone doji candle from the previous week, which still hasn't played out to the downside. And on Friday, we had a spinning top, which is an indecision candle. So you've got a bearish, indecision, last 3 weeks candles. But at this stage of the bull market, you would have been expecting these to really fly, and it hasn't really done so. And we have to heed to what the price action is telling us. So this really causes me quite a lot of caution at the moment, as these candles haven't played out. But the other flip side to that is that it's usually in the final stretches of the bull market that these bearish looking candles can totally be ignored. So there is that possibility, but I would say on a balance of probabilities that with 3 candles, this is more on the downside rather than the upside. And another of the Bitcoin miners, which has done phenomenally well, as you can see, it's had an incredible rise into what the current price is. I mean, this is Cypher Mining, which from the beginning of April this year has gone up by 10x so far. And now what we're getting is a series of very similar bearish looking candles here. We have a shooting star, then we had another shooting star, and now we've got a hangman candle. All 3 are bearish candles. And so far, none of these 3 candles have played out. And again, this is the time when these candles can easily be ignored, because the power to the upside, especially if Bitcoin starts moving to the upside, then it will also drag these to higher prices. But you simply can't ignore 3 consecutive bearish candles. Then the final one I want to have a look at is Clean Spark. Once again, you've got 3 bearish candles here. The main one is the shooting star in the middle, which was the previous week. And then last week, we closed on this bearish looking candle here. Although this candle, people will say, well, this is a wick, and that means there's a rejection of lower prices. However, but at the top of a rally, seeing this candle is telling you that the demand isn't enough to push this through. And what you've got here is an exhaustion of buyers. And when you have an exhaustion of buyers, then this would be the trajectory after that. So in conclusion, as per the title of the video, all I can say is that yes, Bitcoin is at a critical level now. It has to decide what it wants to do at this point. There is a high probability that we're going to get some sort of a pullback, either to the 50% or the 61.8 at 107, 8 or 9,000. And if it decides that it doesn't want to really do that and wants to go higher, then this is an unlikely event, considering we've just been coming back up. But if it does happen, then this is quite a strong signal above the 117,000 that the trajectory that Bitcoin wants to take is more to the upside rather than to the downside. So whilst it's at a critical level, these are the things that I'm waiting for that could possibly happen. A flip above the 117 tells me that Bitcoin wants to go much higher, but a pullback from down here would mean that we go all the way back down to these levels here, around 108,000. Then we may have a decision to make whether this is going to go to the downside or go back up and stay in the bull market. Okay, I'm going to leave it there. Before I go, I just want to say that those people who've been trying to get into the membership section of this channel, you may have been disappointed not to get in, because the membership is actually full. We do get the odd member leaving from time to time, and that opens up another space for a new member to get in. So if you do want to join the private members, where we cover the Bitcoin miners as well as Bitcoin, and we do a market update on a daily basis, which is very critical at this stage of keeping up to date with all the information of what's going on with Bitcoin, the Bitcoin miners and the markets in general. If that's the kind of thing you're interested in and you want to join the private members, we also do 2 videos for the members exclusively on a Wednesday and a Saturday. And if that's of interest to you, then below all of my videos, you'll find that there's a join button here. And if you're on a handheld device, this join button may not appear. Then you have to go into the description box where you'll see the Bitcoin Miners membership join link, which is this one here. And if all that information is worth just 1 coffee per week, which comes to around £12.99 per month, then you can join the rest of the private members on the section. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.